Hey, good afternoon, guys. Hope everyone had a great weekend. Let's go ahead and just do a video format of the weekly scan. Pretty simple if you guys saw what I posted, right? I'm going to keep my focus very, very tight. Um, I talked about it on the chat, just kind of how I'm frustrated with catching the first range of a lot of these stocks that I know exactly what's going to be happening, and then I'm not catching the second phase or the third phase of targets because of outside influences or people saying things in here, or me just being a little bit too strict with where I want to get entries, or greedy would probably be the better word. So I'm keeping things very tight with a lot of these names that have really solid setups that are still in that first phase, if you will, and have a lot of potential to mark up into second and even third target areas. But yeah, I wanted to start this really quickly with this week. Going into July 12th, this is my birthday week as well. My birthday is on Friday, so we'll see if I trade Friday. But overall, right, Monday, usually a no trade day. We should all know this by now. This is the first day to kind of see how the market in the tape feels coming off of the weekly candle close on Friday. And then if we see any continuation off of that Friday daily candle slash that weekly candle Monday too, just kind of gives you an idea of how that tape's moving. Are we going to see continuation? Is the market pulling back and accumulating? Is it gapping up and distributing? It's just a good day to collect data and get a feel for it. So obviously Monday will not be a trade day here. But we do have some crazy stuff going on. So Tuesday we have Fed Chair Powell testifying at 10 a.m. or 7 a.m. Pacific Standard Time. Same exact thing for Wednesday. As we all know, even if it's not FOMC or anything like that, Powell does have a strangle on the market. Everyone kind of just holds their breath. So we'll see what ends up happening on Tuesday and Wednesday, but those should be trade days. I would just wait till Powell's done talking, or kind of just see the directionality of the market prior to him talking. I'll keep an eye for dark pool prints as well in pre-market as well as intraday. Then Thursday, right? Thursday we have a pretty big one, CPI with our inflationary data. I personally, I think we come in hot again. Last time, I think it came in a little bit cooler, right? We had a couple, I think it was three in a row, right, of just back to back to back higher CPI prints. And then we had a cool one, or I think it came on par. I think this one will be a little bit higher again, but we'll see what ends up happening. But this is a big one. This is in pre-market at 5:30 a.m. Pacific Standard Time, or East Coast it's 8:30, and then unemployment claims following that, basically at the same time. And then Friday we have PPI, right, as well as University of Michigan consumer sentiment. So we have a jam-packed week, a lot of ability to trade this week. Remember, these are our volatility drivers. This is what kind of moves the market very quickly and efficiently through the use of data. It's just up to us to be able to find the direction that the market is trying to push towards, right? This is all a price facilitation. This is all an auction. So we'll be trying to go a particular direction through these different data points, right? So good week to be trading this week. Obviously Monday, I would just kind of take it light. But yeah, I just wanted to start with that, and then we can make our way into the charts really quickly. So let's jump into those. Intel is something that I've been big on for a while now. Just a good chart in my opinion for recovery. If we talk about the fair value gap that occurred here on the monthly, where we start from this candle low, right, which is at 40.57, all the way to this candle high here, which is at, I believe, we'll just round it to 32.24. It's the start of the gap. It has potential to recover through that fair value gap all the way up to 40.57. And remember, this is a monthly, so if we go down to the daily time frame, it's a series of daily gap fills that have occurred from different earnings. I think one of them was a sell-off in sympathy with NVIDIA or AMD. So there's a couple opportunities to recover very quickly through the use of gaps. If we tie into the weekly chart here as well, right, we can see this clear base here that's been consolidating since, I would say, back in April, right, with tons of volume coming in at the daily, right, or on the daily time frame, with no major low being made. You guys can see high volume prints with low volume or low candle spread, meaning, right, that somebody got in and the intention wasn't to sell the candle through the low, right? And then as we make our way back to the top, we can always see that the volume kind of dies off. There's no real intention to push it higher. Instead, what we end up seeing is a low volume sell off back to the low, and then we have high volume at the low without a new low being made, right? And it's the same thing over and over and over again. You guys can see here, super high volume, right, on a good green candle here. So somebody bought the low without real intent to push it higher. What does it do? It consolidates in the same exact zone. We have another high volume candle here, albeit lower than this one, but still good high volume candle here that doesn't make a new low. What do we see again? Consolidates flat against the lows. What do we have here? Another very high volume candle coming on this day here, which is about 92 million, right? We end up breaking back towards the lows. You guys can see it's the same thing over and over again, and someone just consistently is buying this low, the low of this range, and then once they collect enough inventory, we'll see a markup. I've told everybody this multiple times. I expect either a break and a breach of this gap, because once again, you have to think about absorption. Sellers are going to be protecting the top of this gap, right? This is progress that they made on the chart. They want this to come lower, but what ends up happening is they place sell orders passively that are just sitting there waiting to sell, and obviously keep price underneath this spot. But the more that price comes up to that and buyers absorb those sellers, this level becomes weaker, right? And then you have potential for buyers to push price above. Price will pull back, and then they can rebid and try to keep price supported above that spot. So that's the whole break and base theory once we absorb the sellers here. So I'm either thinking we get a break like this and a pullback onto 32.24, and then we start to progressively build a trend, right, up and to fill this gap. Or what ends up happening, I think this is the more likely outcome, is a couple rest days, right? We get, I'll actually take this back really quick. Let me delete this. If you guys remember Starbucks, I like to reference this chart because it's more of a recent chart that we talked about, but same concept here. We had our earnings candle high. We ended up marking up, and that's the same concept because, too, look, we have a gap here, right? So we have a gap fill here. What do we end up seeing? We saw a push up. We hit the earnings candle high. We pulled back and flagged on low volume, as you guys can see. We broke out, we based, and then we marked up, right? Very, very simple chart that I like to reflect back on. And I think that's the same exact thing here with Intel. You either get a break and base into the gap, or what you're going to get is a mark up, slight pullback, maybe a couple rest days, or some kind of flag on diverging volume that holds very, very nicely into the EMAs once they catch up. And I'll pull them up here in a second so you guys can see. And then a break, base, go, right? One of the two that's going to happen in my opinion. And if we take a look at the EMAs, you guys can see they're starting to nicely curl here, so maybe a pullback back into those EMAs. But if we get some kind of expansive move, guys, these are going to move very, very nicely because of the consolidation here. There's the low implied vol because it's been holding still for so long. You guys can visually see this with the EMA compression. So this will be a very, very nice, lucrative breakout if we can get into this gap. If we can fill at 34.5, I think we have a lot of room up into this gap up here, guys, which is up to 36.70 to 37. And then obviously, right, the fair value gap is all the way up here at 40.57, right? So a lot of potential. I didn't even talk about this. This could be even a more lucrative trade with multiple ranges because we have a gap up here. Back up towards, let me just slide this across really quickly. Back up to 43.50, and obviously it starts at 41.60 range. There's another gap here. So this should look very similar to Tesla, right? Tesla, we talked about the imbalances that were all across the hourly and on the daily, where there's a path of least resistance that's created with the resistance levels being absorbed. And then as it starts to mark up, it's very easy for it to mark up because there's so many gap fills, right, that were left behind. And once inventory is collected, it's very easily to push your sell orders up to these spots, and the market makers will facilitate price up into these levels, right? So you guys can see it here on Tesla and how easily it marked up through, right, through those spots, basically just melted through. Intel, same exact story, right? If we take a look at this here, same exact story, right? Gap here, gap here, gap here, right? Over and over and over again. So I think Intel is going to have a huge move. So this is my big and primary focus. Now, just an update on Shopify as well. It's very simple. We've talked about this one a ton, right? Low, higher low caught here. I wasn't comfortable using a subjective trend line, so I didn't take the position here, but I wanted to see a bounce off of it and a breach into the earnings candle low. Once again, I didn't take it here just because it didn't give me like a structural pullback. And when I say that, I mean like this, a breakout, a pullback, and then a go. Instead, this just gave like a very simple 3-bar consolidation here. So I did miss the entry here, but it's okay, right? Then from there, we were looking for either a touch of the earnings candle high with a rejection and a pullback, and then a breakout, or a break into the gap and a pullback. We got the latter, right? So we got the breakout into it, and I ended up taking a position here. We had an immediate move above, right? And then we pull back. We talked about this a couple times where these ended up being attempts by sellers to break under, but it was on low volume and not really much effort, right? We had a lower high here. We pulled back. They had another opportunity to break it down here, right, where we clearly saw a candle sweep and a good candle close back above. And then if we take a look on the weekly, you guys will see, right, this looks like a reaccumulation now. Once we had what we needed to see, which is this here, the high volume breakout into the gap. And then the remainder, right, has been all on low volume. And you guys can see multiple attempts to get under with a candle close above. We had 3 weeks of this, right, all on low volume. So what does that mean? It means that it's going to continue with the current trend. If sellers aren't pushing this down and there's no real intent or volume trying to break this down with urgency, it will continue to move up, right? Very important to know that. So I'm still holding this. I'm expecting a break back above the initial high that was made, and that's why I drew this out, right? I think it's going to come here, break out above, retest one more time, and then I think it's just going to continue to do what it's doing, right? Making its way towards 75.30. I'll probably be half out of my position at that point. I do still think that over maybe another earnings cycle or two that this is going to make its way up to 87.99 to 90.55. There's a gap up here with the gap fill being 88.98. So that's pretty much this one. I still think this and Intel are probably the big hitters, right, from where we're currently at. Sorry, my nose is getting a little stuffy, guys. If you hear me sniffling, I'm sorry. But I still think there's a huge opportunity, guys, for this to move 22 points or $23. We'll just round that up, or 33% on the underlying. That'll be massive. So these are two of my biggest positions in terms of confidence as well as position sizing right now. No real update on Roku, guys. I do have a position. I just didn't alert this one because it didn't do exactly what I wanted just yet. I have a couple scenarios here, but remember the big thing was the swing low rather, getting swept. We can clearly see the lower low accumulation with each new low being very, very incremental with high volume right coming after the stops are kind of rated here. You guys can see obviously this. I kind of drew it out pretty nicely, honestly, with this little highlighted zone here, right, being the sweep zone, right? That's what we were kind of looking for to be swept. If we go to the monthly chart, you guys can visually see this a little bit better, right? I'll delete all this stuff here. I mean, dude, take a look at that. Clearly a monthly sweep. This looks like it's just going to keep making its way up. And I want to show this really quickly, right? If we go back to the weekly / the daily, we are now starting to get back above some key resistance, which was holding as support. And then if you guys take a look, right, this was the swing low. This was that previous gap as well, where we saw a lot of consolidation, right? And now what do? We broke above. We're consolidating here on, once again, low volume after the high volume push that got us over this spot. And remember, when these lows are being accumulated like this, and we start to see our initial mark up, right? It doesn't need to move through on high volume once we clear these previous levels, right? Inventory has been collected here, so this can literally melt up on low volume. So it's important not to be afraid to join on the trend if it is moving up on low volume, but it's also important to understand what levels need to be claimed and what the low volume means once it has been claimed, right? Because we are already seeing the high volume to get above these previous spots. Now this can move up on low volume. So don't be afraid of this one. I still have my position right now. Obviously, I'll alert this if we kind of break through this high here, 63.76, or if we pull back, right, and kind of do something like this, right? If we get like a move back here and we hold, I'll probably take a position there and alert that. I do think Roku is going to be another big mover. And then overall, right, I'm going really far out with my expiration because I want to be able to withstand and have my risk be back here, right? 51.51. Which is a little far away from where we're currently at. It's about a 16% drop. But yeah, this, you got to have a little bit of leniency with this, and that's the invalidation for this chart. Or you could simply go back here, which is this old swing low, right at 55.99 if you want to tighten up that stop. But I mean, this chart looks good. Once again, expecting a push towards this gap here at $71 to 68.38. And then I think we have a whole new range, right? If it hits the top of that, I think it's going to base, break out, base, and I think we can move all the way up to this gap here. Man, dude, this one has a lot of potential. So these are my three main focuses, and just wanted to give updates on them really quickly, and that should be it for those. Okay, as for new positions, guys, pretty simple one here, right? I mean, we have a ton of compression once again that's coming off of a very key spot. I'll emphasize that here in a second, but overall structure looks good. We have a low here, higher low, higher low, higher low caught here. And then really this whole green zone that I have marked, if you guys don't know, we had a progression gap from here to here, right? So if we tighten this up, that's just kind of where I'm getting that level from. And you guys can see clear consolidation at this spot. We tried to sweep under, and obviously we caught the higher low trend line, or the macro higher low trend line, I should say. And then we broke out, right? We broke out against this lower high trend line, right? And now we're selling off on low volume, right? We're selling off on low volume. And remember, a lot of people don't realize this, but this spot here, the top of that gap, or I guess I should say progression gap, as well as the bottom, are each independent levels that need to be held as support. So the first lower extreme of that held as support, we broke out. We're pulling back now on low volume. Naturally, what do you guys think should hold? Right? It should be the top of this. So this is an opportunity for a higher low from a bar by bar perspective for that top of that progression gap to be held as support. So I'm going to be watching for an entry on that and then risking the trend line. Now if we kind of clear this up a little bit, right? If we take a look here, this is a huge weekly spot, right? If we take a look at it, this is that weekly high, right? You guys can clearly see it's not just the progression gap, but it's also a very important weekly high that's having an SR flip occur, right? Not to mention low volume just in this general area. The chart is obviously in an uptrend, so I want to side with the trend. These weekly bars don't look the best in terms of wicks, but if you go back and you take a look, right, a lot of this was early week sell-offs, right? So, I mean, if we take a look here, Monday obviously pushed up. We had a high volume projection here. We pulled back, and that was that first weekly bar that didn't look good. But a lot of this has just been consolidation followed by, right, if we take a look here, Monday, really aggressive bar that held the higher low. Tuesday was an inside bar, and then the Wednesday candle, I'm sorry, was higher volume, but still good buyers came on off the low. And then obviously the pullback was on low volume. So a lot of this has been compression after that first weekly sell-off. And we're still consolidating on a higher low. We're consolidating on a key weekly high. We do have our EMAs, right, kind of compressing once again. So if there is a breakout that's going to occur, contracts are going to do very well. So, I mean, I'm just going to be looking for this off of wherever this progression gap is. Sorry, all my levels are a little bit off. What is that, 137? Yeah, 137, and then risking 134.98. And I think that's going to be the sweet spot. And then ideally we get some kind of pullback breakout like this and make our way up to 161.52 and into 165.11. This would be the remainder of the gap that's unfilled, and should be a good gain, right? I don't need a lot of contracts for this one, because if we do catch this entry, right, just to the first target, that's a 17% move. If we catch the full target, that's a 20% move. That'll be a massive amount of premium collected on these just from a delta/gamma perspective. Obviously, with the low volume here, IV will increase as well. So there's a lot of opportunities and a lot of variables that will help increase those contracts' value. So little can go a long way here. So this is a chart that I had to throw on the watch list. And then if we take a look as well, we're going to jump into Hood. I do have a position on this one, but I want to add some extra, so I'll talk about that. Hood's super easy, guys. I already have a position in this for my Novembers, but I want to add some Januaries. Very simple, right? It's still adding into a very strong chart. Volume has been very low at these highs, but once again, a key weekly spot has been claimed. There's been attempts to sell, right? You guys can see it on these weekly wicks here, where sellers were apparent trying to push this down, and they tried to break under, right? But each time it's tried to break under, Volume has once again remained pretty low in this general range. There hasn't been a high volume attempt to break underneath this previous high here. You guys can see the clear SR pivot that occurred here, right, where we rejected, and then we broke out. They tried to break us back down. We held and closed above. And for the most part, we've closed above for 4 weeks now, right? This was a good candle for them to try to reverse it on the shooting star candle, and they didn't, right? We kind of held above this range for the next 3 weeks on low volume once again. And if we take a look on the daily chart here, right, we're kind of flagging, right? We're kind of flagging. If you guys want to call this an inverse head and shoulders with the left one being here, the head, and the right, you guys can. I don't pay attention to that, but this looks like a very, very nice flag slash consolidation here where I'm expecting, right, a big push above into this high. If we can break that, we can pull back and hold 23.33, which is that weekly high. I would add my January contracts to the January $30 call, and I would expect to move back up towards this current high here, the external high at 24.28. Ideally a breakout and a pullback, and then a big move, right, all the way to 30, or maybe a little bit more, right, because the target for this this chart itself would be this previous support, which is way, way back from the IPO, right? So 33.25. You guys can see this was the IPO price low. Obviously, it broke out. They sold off into that, and then it consolidated, and then just broke down, right? So this would be the most logical level for this to retest, which would be 33.25, and that's what I'm looking for. You know, January's would give us a good exposure into the earnings that are coming up August 7th, the Novembers as well. So I mean, I could definitely double whammy or even add into those Novembers if I wanted to, but I'm just going to hold what I have left of the Novembers and just re-roll into January 2025 30 calls. All right, guys, I'll give you guys SPY here really quickly. I'm basically going to be using data here to determine if I'm going to be trading SPY, but as you guys know, we broke this previous high here, and we're just continuing to make new highs, right? And obviously, we're at all-time highs. And I don't trade fib extensions or anything like that, so if this continues to go straight up, I'm not really interested in trading it. If you guys are, I mean, it's pretty easy. You would just kind of take this bit by bit and use the higher gamma levels or gamma yielding strikes as your targets. So 555 is a big one, and then above that, 560 would be your next target. Or you could use fib extensions, however you guys want to use it, Elliott wave counts, yada, yada, yada. I'm only interested really if this ends up being short, right? And I'll show you guys here in a minute. This is also data driven, so it's not going to be just me hoping for this to break down. But if you take a look here, right, and I'll switch this over, this would be a great opportunity for this to break up, right, and then obviously trend down, retest this old gap, or not this gap, what am I saying, this old high, and then continue to make its way towards this liquidity buildup here on the daily where we had a lot of equal lows. A lot of liquidities built at this low here, but you also have to think a lot of these levels were absorbed, right? We had 1, 2, 3, 4, 5, 6 days of absorption with consistent equal lows there, and then obviously we have a gap down below. And I guess I want to show you this really quickly. If we go to web right here, this is the Greeks essentially for SPY, and it's really important to let Monday kind of set, right? This Monday expiration hasn't dropped off yet, so this will drop off on Monday at 8:30 a.m., right? Or I think it's 11:30 for you guys on the East Coast. So perfect time to just kind of let the dust settle, let this expiration drop off, because I think it's dramatically affecting the look of this, right? So dealer Greeks here, as of right now, dealers are long. That's what it means when it's negative like this. So, you know, they are still long. But if you take a look down here, right, on 7.8, 7.9, 7.10, and 7.11, they're bearish, right? So maybe if we see this 7.5 expiration drop off, we'll see basically dealers then flip positive, which would be bearish, right? And if we see that flip, okay, we can expect this will start to trade downwards towards some of these bigger gamma levels, right? On Tuesday, Wednesday, Thursday, or this is Monday, I'm sorry. So Monday, Tuesday, Wednesday, Thursday, and then Friday, it could potentially flip back bullish, right? Now, if we take a look here and kind of go towards 7-8, which would be Monday, right? Monday's pretty simple. 553 looks like it's going to be supporting price. It doesn't look like much is going to be happening. And all of these are essentially bounce levels, right? All the way to 550. That makes a lot of sense, right? If we go to the actual chart here, right? If this ends up pushing down, you guys can see 550 was the previous high. So I could see this, if anything, on Monday. It just kind of catches here, right? Maybe gives you a bounce or a lower high. But either way, I don't see this 550 level breaking on that first day of the week on Monday. But then if we take a look on Tuesday, this is where it gets interesting. You guys can see, right? We have 549 being a pull, 548. 547 even if it's a smaller level, and then this is where we start to see that big 540 level kind of kicking in, right? So 540 is something to note. This is an aggregate level as well. It's the second biggest pull, with 553 being the biggest currently. I do think this 553 is going to drop off though on Monday. So we'll see if this level still remains or if a lot of that premium gets moved into the 540 and 540 is your biggest pull. But a very interesting thing to see here. So once again, if we go to basically Tuesday, right? Let's say we end up pushing or Powell talks and we end up breaking under 550. You have to think now 551 and 550 will be resistance. So if we go back to the chart now, that's why I had this drawn out, right? So if we take a look, I think maybe we can break underneath 550, and if we do and we retest 550, we're now going to have market makers, aka dealers, on our side and selling equity and using these old levels, right, as now resistance, where they're going to be de-risking. So that could be very, very interesting. And then if we follow suit back with the gamma here as well and kind of the data, we go to 7.9. Oh, I already clicked 7.9. I'm an idiot. If we go to 7.10, right, which would be Wednesday, you guys can see we basically have an entire gamma ramp all the way down to 548. Maybe some weak buyers here at 544, but we still have that a really large pull to 542, and then that ultimate 540 level, right? Then we make our way to 711, kind of the same thing, right? Where we have this pull down here. Even 537 would be your low, but if it does catch her, maybe you can see a spring back to 551. It gets a little iffy on Thursday, and then Friday it gets very, very misconstrued. This is hard to read. There could be a lot of hedging with some of these strikes, like 533, 536. So we'll have to kind of see what ends up happening as the week plays out if these levels kind of tighten up going into Friday. But very, very interesting to see what happens on Monday, right? What happens when this 7.5 expiration drops off, and if we see any adjusting, right? If this 553 level then gets transitioned into 540, and 540 ends up being your biggest pull, and then we see these green bars grow, meaning that there's a lot more selling pressure and kind of pressure on market makers to sell equity at these levels, as well as seeing the overall, right, the dealer Greeks overall for the deltas flip green, which would be bearish for market makers. So it's going to be interesting to see how Monday happens. What happens on Tuesday/Wednesday? Do we break underneath 550? And if we do, and it retests, that's why I drew this out, right? We can then risk 555 or the high, and then go short, and then try to target the low here, right, which would be 543. And then ultimately that 540 level would be a push all the way back towards this gap here, which would be a pretty good move, guys. This is a 2R trade, which is right where I like to fit a lot of my criteria in terms of an R multiple. I like to go for 2 or 2.5 R. So this could be a good trade, but it really just kind of comes down to Monday. If Monday, does what I want, and then Tuesday we don't break under 550, we just keep going higher, I'm not going to touch this, right? So once again, just really dependent on the beginning of the week. And if we can break under 550 and retest and reject, I think I'll grab some shorts for 540 and try to hold these from target to target. So that's pretty much it, guys. I just wanted to give you a quick update on this. Sorry I haven't really touched this that much, but I feel very out of tune with this. I think there's a lot better individual underlying charts out there that can yield way higher percentages that don't jeopardize my money as much as SPY, right? Obviously, it's nice to catch a good 0DTE or 2DTE, but I feel like buying time and having a lot of these other setups develop has been a lot safer and a lot less anxiety driven. But I would definitely entertain it if we can get the right criteria here for that 550 break and retest.